If you're going to come at the king of the online sports nutrition market, you better not miss. So I'll decode that introductory statement a bit later in this content, but on April 29th of 2025, THG, aka the company formerly known as the HYROX Group, updated the public markets by releasing its first quarter 2025 trading statement. And I'll be utilizing those financial statements along with notes I took while listening to the earnings conference call and any relevant publicly disclosed information to obviously update you on the recent performance of the THG Nutrition segment, but also utilize everything as the contextual backdrop for my expanded strategic commentary around global nutrition market dynamics and trends. And just some quick financial mumbo jumbo housekeeping for the bulk of my audience that's located within the United States, since THG is not an American corporation and has different reporting standards for their public markets. This report will be a bit lighter on financial metrics. Also, I did the currency conversion on all these financial metrics, so numbers will be presented in US dollars, not British pounds. Moreover, I'll be using the constant currency percentages, which just means the currency fluctuations of the multinational company are stripped out for the ease of comparisons. Additionally, for those that might not be too familiar with the portfolio composition, THG, as of a demerger at the end of 2024, now only includes two branded product divisions called THG Beauty and THG Nutrition. And while I believe understanding both branded product divisions of THG is important, this content piece will only focus on updating you on the THG Nutrition side, which includes the world's largest online sports nutrition brand, MyProtein, and its family of sub-brands, the largest of those being MyVitamins. But let's start with a quick financial overview of THG Nutrition. In the first quarter of 2025, THG Nutrition reported generating revenue of approximately $196 million, which was basically flat year over year, but up around 8% on a quarter over quarter sequential basis. And while those aren't necessarily great results, THG Nutrition noted that the segment saw month-on-month sales improvement throughout the quarter. Moreover, momentum was said to be demonstrated in categories outside of the core protein range, especially in activewear, vitamins, bars, and snacks. But maybe that's a good transition into examining a collection of recent strategic decisions that will help you better understand the THG Nutrition business story. And we can start with arguably the most important strategic decision recently, which involved the biggest rebrand in the history of MyProtein, essentially a massive undertaking that attempted to seamlessly reposition and evolve the business model of an almost billion-dollar sports nutrition legacy brand that operates in 70 territories and has several thousand SKUs. And while expanding further away from primarily speaking to seasoned gym enthusiasts to now supporting everyone regardless of their fitness journey stage has historically been difficult to accomplish successfully for sizable legacy sports nutrition brands, MyProtein might be proving it's an outlier. And that's because basically 18 months after the start of its initial staggered market rollout, the transitionary impacts from the rebrand are now behind MyProtein. THG leadership reaffirmed that customer feedback continues to be promising, with unaided brand recognition for MyProtein now at its highest level to date. Furthermore, MyProtein is the most top of mind sports nutrition brand in the UK market and the category leader in driving consumers through the purchase funnel, ranking first in turning brand awareness into consideration and converting buyers into brand loyalists. Also, THG leadership noted a stabilization in global active customers and the successful recovery in average selling prices online to pre-rebrand levels, while supporting a competitive and sustainable pricing structure. And that's super important as it provides the best chance that MyProtein can shed its previous price-sensitive customer file and continue moving upstream in positioning, thus unlocking more global sales channel diversification opportunities. Yes, THG Nutrition still mainly deploys a global digital-first commerce strategy, with about 85% of its total revenue coming from direct-to-consumer and online marketplaces, but has continued to invest in offline retail partnerships where it places a limited or exclusive SKU range as part of a bigger demand generation strategy. In terms of the global offline retail landscape, MyProtein is currently stocked in over 20,000 retail locations and is expected to exceed 6,000 US retail locations by year end. But this level of offline retail momentum is expected to help drive a more diversified retail mix over the next few years. And most recently, this offline retail expansion strategy has included vending machines and various food service channel partnerships. But the most highlighted offline retail expansion strategy continues to be surrounding the development of MyProtein products that are sold under licensing arrangements. When done correctly, these types of retail partnerships boost customer touchpoints and broaden brand appeal. Currently, this strategy is being deployed in the brand's two largest markets, the UK and Japan. But the value created from the MyProtein brand evolution is showing up in an increase of other in real life moments as well. While I don't have the metrics to back this statement up, I'm confident MyProtein being the official nutrition partner of HYROX and having a tailored product range has been highly beneficial in engaging with this influential community. For those unaware, HYROX calls itself the global sport of fitness racing, combining traditional endurance disciplines with natural movements that test every facet of fitness and strength. HYROX is a more accessible and standardized fitness test compared to CrossFit, and the massive growth of the events feels like the mid-2010s CrossFit era. Similarly, an increase in MyProtein Move Club events and showing up more prominently at global fitness expos like FIBO and the Arnold Sports Festival will undoubtedly help build a stronger global brand community. Moreover, another under-the-radar aspect of brand momentum, especially when deploying a lifestyle branding strategy that seeks to help build global community through movement, is the portion of total sales that comes from apparel or activewear. And this is because the same younger consumers that hate traditional advertising will have no problem wearing branded merchandise if it says something about who they are. So maybe the ultimate test of CPG brand equity is not if they know who you are and ingest your products, but if they would wear you. And MyProtein now sells more than $50 million in activewear, which accounts for about 8% of total THG Nutrition online revenue. And then a last interesting examination before decoding the introductory statement is around the growth of MyVitamins. THG Nutrition noted that this subline, which makes up around 9% of the total THG Nutrition online revenue, delivered record growth in the quarter. But what's maybe most intriguing is how different the customer demographics of MyVitamins are compared to MyProtein and its possible synergistic value with the other THG branded product segment, THG Beauty. The MyVitamins customer base is 79% female and 68% over the age of 34. Plus, a large portion of them hold a Look Fantastic beauty loyalty account. So as the world of beauty blurs between outside in and inside out, there's increasingly cross-commercial opportunities that I'd expect THG to flex in the next few years. But to clear up the introductory statement, about a week prior to this quarterly trading statement release, the board of directors at THG rejected an unsolicited proposal to acquire MyProtein. According to reports, THG has turned down the upwards of $800 million offer from Selkirk, an investment vehicle, saying it fundamentally undervalued the MyProtein business and its potential for future growth. Additionally, the deal structure carried significant execution complexity and risks, in particular the ability of Selkirk to raise sufficient funding by selling new equity and debt issuance. But maybe the most interesting element of this unsolicited acquisition proposal was that Selkirk is run by a former THG board member and backed by Kelso Group, an activist investor in THG. But as THG founder and CEO Matthew Moulding recently stated, public company life is like Squid Games for entrepreneurs. And while Selkirk is no longer in any form of discussions with THG, it could always get a green light to approach THG again in the near future. But I hope you enjoyed the first principles thinking that went into my latest YouTube video. If you did, can you do me a favor by hitting that like button? That quick and free action helps YouTube know my content is worth spreading to more people. Also, we're getting really close to reaching my next subscriber goal, and it would be great if you join me on this journey. But to do that, we need to fix the fact that slightly more than 3/4 of you that are watching this video right now are not subscribed to my YouTube channel, and that hurts my feelings. Regardless, I want to thank you for giving me some of your attention and time, and I'll see you on the next one.